Happy Friday, traders. It is 8:04 a.m. Chicago time on Friday, the 27th of May, 2022. This is episode number 2242. Mic check, please. First and foremost, just to make sure that I'm not blowing your speakers out. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I didn't have a chance to complete the pre-market summary sheet, basically coming into the trade, not having completed my homework. I ran way behind today. I really need this long weekend. So I couldn't get to what was on deck for earnings, but I have it in front of me. They're not really seeing anything significant in terms of earnings. And the calendar this morning had personal spending month on month and personal income month on month for April. Personal spending came in at 0.9%, beating the forecast of 0.8%. Personal income came in at 0.4%. versus the forecast of 0.6, or spending more, earning less. At the same time, we got wholesale inventories, which came in at 2.1%, which is interesting. Wholesale inventories higher than expected in a supply chain crunch. PCE price index came in at 0.2, better than 0.3. The year-on-year price index came in actually at 6.3%. versus 6.4. Retail inventories ex autos came in better at 1.7% versus 1.5. We're seeing the market pop higher since. We've been pushing higher since, and it's looking like it's another day of a squeeze higher. So mild risk on posture this morning, and that's what's driving things. There's nothing really special, except that it's a holiday weekend this weekend. Memorial Day on Monday. This marks the beginning of summer here in the U.S. Pools open, boats go into the lakes and waterfronts and so on. And it's very likely to get pretty dead quite early today in terms of trading. So that's what we have. Looking forward, Michigan consumer sentiment final for May expected at 59.1. This is a low tier figure. The prelim is the one that's important. The inventory is actually correct. A zero inventory means that there's equal volume above and below the prior day's close or settle. We have 45% more longs or 45% more volume on top of the close than we do below it. The inventory is long by 45%. Nothing to write home about. The range, again, 46 points. We've seen ranges in that 45.75 to 52 points or something in the overnight session. And we're continuing to see that today. The high in the overnight's 40.87 1/4. The point of control shifted dramatically higher. If you recall, the number we're looking for yesterday and the day before that was 40.15, and here we are with an overnight point of control of 40.65, the low of 40.41.25. Quite a rally yesterday, and that's where we stand. ETH continues to take a beating, and so does my crypto portfolio. It's heavy on ETH. I think this is basically where I added last time. I think around June of last year, I added about 1,700. Anyway, very interesting. This economy hedge is not really an economy hedge. It's moving with the market. So in any case, that's what we have for today. I'm not going to go over the what I talked about yesterday. I do encourage you to go and watch the video, the recording from yesterday's webinar. Yesterday's webinar was called An Anatomy of a Trade. and it got really technical, and I probably covered a whole lot more than I wanted to. But I walked through why this convergent trading pre-market summary sheet's important, why I do the trader bite, how I'm preparing for context, what is setting up for the day. Then I go into setting up what my stops are, the recommended stops in the current rotational or volatility environment, uh, how I'm setting up my scale outs, and how I'm setting up the trade management. I really, really encourage you to go have a look at that webinar. I'll pop a link here into the YouTube chat at the end of this. And then we dove right into stalking from zone to zone, to order flow and execution. I put on a couple of, I showed a scalping and a structured setup as well that I commonly take. Anyway, it's chock full. I mean, look, it's like you're sitting next to me, really, and I'm talking to you for an hour and 50. I think it went an hour and 15, 20 minutes yesterday. It was insane. Longest public webinar I've done, I think, in a while. So I encourage you to check that out. Let's take a look at where we are in the grander scheme. Okay, so really quick. If you recall, I talked about 38.55, talked about expecting us to go down and check it out on this day here on Tuesday. It ended up going down to like 72, turning around and finishing bullish. And I said, hey, look out above. We're likely to go to 40.15. And yesterday, we ended up going almost 40.15, 40.09 on Wednesday. And then yesterday we had an open test drive, or an open rejection reverse. There was a driving behavior yesterday right off the open, and immediately that says caution. What a driving type open on the edge of the prior day's range. So this is the edge of the prior day's range. We opened right here, this little triangle, and then we immediately pushed higher. And what we did was we created a pretty big separation between the current price action. It tested the mid, which was a very early setup, which I could not take. I try to avoid trading in the first 15 minutes or so, unless something really, really beautiful sets up. So, we started to get quick separation between the current market prices with VWAP and mid. We are pushing above the prior day's range. We closed the single prints. These are single prints right here that are being highlighted. You can see there's a set up here, a big set up here, and so on. Those are poor structures that we're likely to test at some point in the future. But yesterday just spoke of the fact that we are really pushing strong. So if we look at yesterday here, as soon as we open, look at the tail on that open. That is an open rejection reverse, or an open test drive. And we have really decent separation between the VWAP and the price action. This tells me that it is likely to continue higher. And so immediately we lay off of the shorts. When we see that kind of open, you lay off the shorts. So if my choices are to be long, short, or flat, then I lay off the shorts. This is the Monty Hall. This is the Monty Hall problem. Go look it up. Go look up what the Monty Hall problem is. If we lay off the shorts, then I'm left with sit on your hands or get long. And so I'm looking for structure to get long, or I'm not doing anything. I am not stocking short. This reduces the amount of effort I have to make tremendously, because I'm not trying to figure out where the top is likely to be. I'm not trying to figure out what to fade. Is it done? I'm not trying to figure out. So somebody asked yesterday, and I couldn't answer during the webinar because, again, we went way over. It's supposed to be a 45-minute webinar, went an hour and 15 minutes or something. What would it take for me to take a short yesterday? What it would take is the kind of action that happened on the close yesterday. If you recall, the webinar ended somewhere in here, and I had talked in the webinar that it's very, very likely to go down to 40.50 before rotating back up to 62, which is another opportunity, not at a short, but at a long. But in order to take a short here, I have to see a very large expansion in the range, in the rotations to the downside. And then I expect to see a pullback that is weak and then a turn. And that sets up initially a scalp short to VWAP, and then you take them right off at VWAP. You don't carry that trade because it's likely to flash back and go to the high like it did in this bar. But it first has to start expanding rotations dramatically to the downside. In other words, it has to create an impulse to the downside. It has to make a move that is 21 points or better to the downside from the last rotation. And then when we'll start looking for real structured shorts, it has to get below the RTH VWAP and RTH mid, which are not shown here. They're shown here. So if we look at yesterday, too far. If we look at yesterday, it has to get below this price right here, which happens to coincide with the VWAP, full session VWAP. The dashed lines are full session. The solid lines are RTH. It has to get below here, below the mid, pull back, a weak retest of the mid. Now we have structured shorts, and those shorts can be quite beautiful because the trend for everybody is to the upside, and you can see the bubbles, these big lots, big lots, big lots. See those clouds there? That's order flow there. Once it turns this way, it can drop really hard. That can set up a really good short. That didn't happen yesterday. Yesterday, we had a one-tick failed auction right there. Very classic setup. It tests the prior high to see if there's any continuation energy. And if you recall yesterday, that area right there, the 40.65, was the key resistance zone. Was it 40.65, 40.72? 40.65, I think, was the key resistance zone. Very, very important stock zone, and it stalled right above there, consolidated, and it started to turn. So that worked out beautifully. The bottom of this swing was the key support forecast. The forecasted key support zone that held beautifully. So it gives me comfort that I still the stock zone levels that I'm creating every morning are still have a respected and a strong basis. So very, very interesting. We finished above the IB yesterday. You can call it a trend day. It was a multi-distribution profile day. So if we look at the intraday here, you can see there's a lot of distributions, a lot of zippers. So this is quite typical of a trend day, and it's a bit of a P-shaped profile. This is a short covering day, squeezing them higher. And then we reopen and we create a lower distribution here in the Asian session. Then later, a little bit later in the European session, around 4 o'clock, we get a pop and we consolidate up here. So now we're trading. So here's the point of control of yesterday right here. This is the most traded price in yesterday's RTH session. Here's the overnight point of control. You see there's an overlap there. Even though we are pushing higher or appear to be pushing higher, the trade is very, very slow right now for this time of day. We are actually in balance, believe it or not. We managed to take out the weak high, the double top here, basically. We've managed to take that out in the overnight session, so that was expected, and it's done. And we are approaching last week's high. We're about to take out the one-time framing that was in place on the weekly that was broken. on a very wide week last week, and then we started this week in the middle of the range. We tried to push lower, and here we are on the upper extreme. This is quite bullish. The low we put in the other day at 72, 38.72 or 38.70, I don't remember where it was. That low is an intermediate swing low, and we are likely to push back to 4,200 from here. I'm looking 42.20 as the key area next that we are likely to test, and the break of the 40.89 here, last week's high, starts us on that path, and it's looking like it is set up today to do so. Otherwise, we will end up with an inside week this week versus last week. Next week is only 4 days of trading since Monday's off, giving participants a shorter amount of time to get the business done for the week. But what we have, again, is the point of control very prominent here. You can see the orange profile for the overnight overlapping yesterday's point of control at the on the RTH. There is a magnet. What this does is it generates a magnet area down in this 40.65, 40.66 area where we had that key resistance yesterday. So pay attention this morning. If it starts to rotate lower and you happen to catch a short, you have a short setup, short scalp, or whatever, the area that you really want to pay attention to this morning is this 40.65. We have the full session VWAP, full session mid, the overnight point of control there. And then we have yesterday's day session point of control with the highest volume there, all in the same price. This is the immediate over underline on the open is this 40.65. So pull back to 40.65 will have me stalking long on the bounce. So I'm not looking to just place a bid here and just get run over. I'm looking for it to start to stall into it. Look at the order flow. Look for collisions. I expect a lot of collisions into 40.65. And then any pullback then is a trigger long. And a trigger long would target that week's high. So I'm looking for something. The trade setup is 4.5 points of a stop. So remember that number, 4.5 points of a stop. I'm looking for it to turn around the 40.65. It can push as far as 40.62 and still be okay. Let me look up the exact point of control of yesterday. Yeah, 40.62. A lot of numbers in my head, but I was correct. I can push as far as 40.62. So I'm looking for 65 is the area that I'm interested in stalking long. 4.5 points of risk. And I'm looking for that 40.8975. That's the number I would be gunning for on longs. So 4.5 points of risk, and I'm looking at about 24 points of a target. And then with scale outs, scaling equal to risk, double risk. Once we get those scale outs, the overall R factor for that planned trade is around 3R. Right, 3.2R or something like that. So that's what I'm looking for. Looking to get in over here, take off risk, scale for the rotation, and then look for the prior week's high. That is the primary scenario of today. Okay, and the reason I'm looking at it this way is because this thing had taken off from, it popped higher and then it dropped on the personal spending and personal income numbers, and it has pushed higher. So any pullback I'm looking to buy with the overall trend. That's the key play of the day. That's all I have time for today. That's all I wanted to cover. I don't have much more to say other than it is a holiday weekend. Don't be stupid. Please don't sit here and defend a trade into the close today. Be cautious on the close. People are going to balance risk into a long weekend. This is not the day to prove to yourself that you can be a big trader. This is not a day to increase your size. This is not a day to do anything unusual. This is a day to get your business done early in the first 2 hours. And if you're in the Northern Hemisphere, it's a great day to go out and enjoy the outdoors. This is not a good day to trade the whole day and sit at your desk all day. Promise you, you would be more rested coming back. You will not miss very much. Even if it went up another 100 points, it doesn't matter. Chances are it is not a great day for you to trade it. So there's going to be a lot of algo stuff going on today, weekly options, all that nonsense. And the humans, the real traders are going to be on their boats, yachts, or whatever at their swimming pool after about 11 Central, 12 Eastern. You'll notice a very dramatic drop-off in relative volume today. Okay, I'm just trying to save you some money, get you rested for summer trading. Good luck, and I'll catch you. I'll catch you Tuesday. No Trader Bite on Monday. Okay, take care.